If any of you were crazy enough to go through that exercise with Annette and still are thinking about taking the trip down the road of starting a business, hopefully I can help you get some ideas on how to fund it. Just a little bit about me. I'm the Vice President of the Missouri Innovation Center. We manage and operate the MU Life Science Business Incubator, which is down on Providence Road near the Red Cross. I've been doing this for about 25 years, and my expertise is in entrepreneurial finance. So I spent the last 2.5 decades now trying to help make sure that my clients and the folks that I work with get the funding they need to start their business. So you've decided you're going to start your business, you're taking the leap, you're the pig. You got to have money. I mean, that is the common currency that's going to make things happen. Without it, you're simply not going to get very far. So everybody gets down to these simple questions. I mean, how much money are you going to need? There's a difference between launching a company with $20,000 versus $20 million. And when are you going to need it? Some companies are able to maybe get $20,000, $30,000, start to make sales, continue to grow, maybe need a little more after that, and can self-fund themselves or more to get through that first year or two before they even make their first sale. And looks like internet's a challenge. Probably one of the most important questions I ask people that I work with is, how is it that you know? How do you know what money you need and when you need it? It just so happens in another room right now, someone's talking about financial statements and projections. Fortunately, you don't have to bail on me. This is all being recorded and you can go back and take a look at that session. But I'm going to strongly encourage you to do that, because other than family and friends, you're really not going to get money from anybody to launch your business without being able to explain to people in a credible way how it is you know how much money you need and when you know it and when you need it. Plus, what exactly are you going to use it for? Is that money for sales? Is it for marketing? Is it to build prototypes? It all makes a difference. Likewise, what's your ability to repay the money? That's going to depend on the kind of funds that are available to you. Can you start paying this money back next week, next month? Or is it going to be years before you could hope to ever pay the money back? And along that lines is how will you provide for that return or that exit to the people that give you the money? We don't have enough time in 15 minutes to dig into how important this is, but without that information, it's not going to do you any good. Bootstrapping simply, I hijacked from Investopedia, is building a company from the ground up, pretty much with the money that you have, and then using the money that you're making from sales to self-fund and to keep growing. I don't have statistics. Based on the folks that I know, I'd say a whole lot of businesses start this way. It's the easiest way. I should say easiest. You don't have to go, as Annette said, go get those rejections and get all of those no's. You already have the money. You can go out and spend it the way you want. But there's certainly some challenges. And bootstrapping ideally is going to work for those companies that have a fair amount of time to get from where they are to the point, frankly, where they want to be. With limited resources, it's going to take you longer to get where you want to go. If you don't have $1 million and you've only got $10,000, it's probably going to take a lot longer to get where you need to be in your business. Some businesses can afford to take their time and get there. Others probably can't. My guess is if you don't come up with the next new fancy cell phone, you're not going to be competitive with the other folks. You don't have 3 years to figure out how to make a cell phone. Your product may not be like that. Obviously, you're not going to be bootstrapping if you and your family who might give you money don't have it to begin with. Bootstrapping is not an option for everybody. It's pretty handy if you have a company that in very short order is going to be making sales. If you can get a little bit of money and get going and have sales in a week or two, those sales can help fund that growth that you're going to be going through. And the growth, if you are self-funding and bootstrapping, for the most part, needs to be fairly slow and steady. So I don't know about anyone on the call, but if I've got $5,000 and maybe I've got an extra $500 a month that I can put into the business, if all of a sudden I grow and get a new contract with a company and need $40,000 worth of inventory because I've grown so much and all I have is $500 this month to stick into my company, that kind of growth just isn't sustainable if you're just using your own funds and bootstrapping. So obviously everything's easier said than done, but what are some of the tools and techniques you can use for bootstrapping? Obviously gifts. Most of those are going to come from family, maybe early inheritance, maybe mom likes you better than any of the other siblings, but that's obviously one of the first places to go. Grants is another option, but I want to encourage folks to appreciate the fact that most grants are available to nonprofits. I know there's one or two books out there that talk about all these grants that are available for businesses. Most aren't. Grants are made by nonprofits and organizations and federal and state agencies to nonprofits. With COVID and some other issues, there are some grants that are available, and I would recommend that you look into all options, but don't expect to fund your for-profit business through grants. Something that I'll say is at least newer is crowdfunding. You're not taking on debt, you're not taking investors, you're actually getting folks to support you, to donate to you, if you will. And oftentimes in exchange, you're giving folks some kind of trinket, some kind of gift, some kind of something, but you're not repaying the debt and no one is buying part of your company. Here in Columbia, given the students that we have and even other folks, competition shouldn't be overlooked. There are, gosh, probably hundreds now of business plan competitions and pitch competitions. Some of those, I know the Rice Business Plan competition, I think the winner this year got like $600,000. It's amazing how much money is available if you're willing to go and do these competitions. Accelerator programs, I put into that same category. We've been very fortunate in Columbia. There have been a lot of companies that have wanted to raise money and get help fast. I've applied to the accelerator programs like Y Combinator, 500 startups in California. I think Equipment Chair probably is one that folks in this area would know very well. They went through that accelerator program, raised money. Fortunately for us, they stayed here in the community, or came back as it will, and they're doing some amazing things. Those funds would not have been available to them had they not gone through that kind of program. And some of the other things that aren't talked about nearly as much is leasing. Everybody thinks when they start the business, they need to go buy a computer, buy the copier, buy the delivery van, buy. All of that takes money, and it takes money now. I would encourage folks to strongly consider leasing. It is amazing the number of programs that are available, and you can lease just about anything. You've got small monthly payments that way and don't need a lot of cash. Bartering and partnering, another thing that isn't talked about a lot, but it's really popular. There may be other businesses that need what you need. You could certainly do things in kind with them. And then you'll have suppliers and vendors and people in your ecosystem that are going to benefit from your success. I've worked with companies that have been able to get vendors to give them a lot of product and a lot of help early on for no cost, hoping as a guess, as an investment, whatever you want to call it, that the company would be successful. Because if your company's successful, that vendor is going to then make a whole lot of money, being your supplier when you're doing really well. Trade credits, just a fancy way of saying that the people you're buying things from give you 30, 60, 90 days to pay the bills. My favorite example of that is restaurants. You buy food from the trucks, you get 60 days to pay, and within 3 days you've taken the meat and the produce and turned it into food and sold it at your restaurant. So you already have cash coming in 5 weeks before the bills even due. Obviously, you can grow without spending a lot of your money if you can use somebody else's money or credit to grow with. And then finally, if you do have big orders and start selling to companies, you can actually take those invoices and those contracts and take them to certain finance companies that will actually pay you cash for them now when you need it, albeit not 100%. And you get the cash now, and then when that order is fulfilled and the company pays that order, the company then gets that money. So there's a lot of techniques you can use for bootstrapping. If bootstrapping doesn't work for all the reasons we talked about, you're looking at a choice between debt and equity. Lighter Capital's got a fantastic document on all the options and which options are right. I did not want to steal their property, so you would have to go or contact me and we can get that to you. But there's, as you can see from this image, there are a whole lot of options for different ways to get debt and equity. And they depend on, as you can see on the left, how much money your company is bringing in. And on the bottom, basically what stage it's in, startup versus an older company. We obviously don't have time to go through each and every one of those, but I do want to cover some basics. Debt versus equity. So debt, most people are familiar with. It's a loan. You know, it's a very low risk way for someone to give you money for a certain amount of time, a year, 2 years, 5 years. People don't realize this, but the loans you're going to get for your business are still going to require personal guarantees and collateral. Banks are amazing. They are super supportive, but they are not in the business of taking risk. Their job is to take your deposits, and when you need that money back, they got to make sure it's there for you. So that's why they require collateral, the guarantees, because they're not in the job of taking risk. But they do loan money, and when you can't get money normally from banks, there are government programs like SBA loans that allow banks to give you what I would call more risky loans. To get that kind of money, you're going to have to prove that you can pay that money back. You're going to have to talk about your financial projections. You're going to have to talk about your sales and your profit margins. You're going to have to convince those lenders that you're capable of paying the bill when it comes. Credit cards is an odd one. Don't recommend it, but sometimes it's used. Family and friends, maybe they don't give you money, but they'll loan it to you. Microloans are a very popular program, you know, $25,000, $35,000, $50,000. Of course, bank loans, there's lines of credit, SBA loans. There's a lot of ways to get loans if you can. Pros to those, it's very cheap money. I mean, really cheap money, especially today. The regulations that are out there are actually there to protect you, which is kind of nice. And you're not giving up part of your company. You're not bringing anyone into the company. You're just borrowing money. So you still have 100% control of your business. The downside to debt is, as I'm sure most of you know, the minute you borrow the money, 30, 45, 60 days later, you start making payments. So even if your business is still 2 years away from making its first sale, you're paying back that money starting next month. And like I said, you do need collateral, and they sure prefer some operating history. They prefer some proof that you're going to be able to pay those bills. Equity, on the other hand, that is money that's provided to you in exchange for owning part of your company. It's not debt. You don't pay it back right away. Investors are willing to wait, heck, 2, 3, 4, 7 years sometimes to get their return. They're not expecting collateral, and they're not expecting an operating history. They're expecting to fund people based on the future promise of what you can do, not how good your business has made money in the past. That money comes, again, sometimes from family and friends. They become investors. I'd say the most frequently used, the thing that gets most companies started in this phase would be angel investing, angel investors. There's also venture capital and private equity, which is quite a ways down the road. Upside, you're not turning around and taking the cash you need to grow to your business and paying back right away. You keep plowing that money back into your business, and investors get their money back when you sell the company, do an IPO, your company gets bought. And it's also what they like to call smart money. Those investors, chances are very smart, successful business people. They can add a great deal to your business and help you out a lot. Downside, it's extremely expensive compared to loans. A loan, you may pay 5%. Equity, you may give them 20 times their return. And the government regulations that are out there are actually there to protect investors, not you, the company. And of course, you're giving up some share of control in your business. It's not just you that owns it and makes the decisions, it's you and your investors. So I hope I kept within time. There's way too much to cover. I would strongly encourage everyone to reach out to me if you have any questions. The Missouri Innovation Center, we do not charge you to answer questions. We don't have that kind of business model, so please feel free to reach out and let me know if you have any questions.